Good morning everyone. This is Sakis Paraskevou, fundamental analyst at IronFX Global, bringing you the morning comment for the 14th of October. China's CPI slows more than expected. Consumer prices rose only 1.6% year-over-year in September, down from 2% year-over-year in August, while producer prices fell 5.9% year-on-year at the same pace as in the prior month and in line with expectations. The fall in the PPI marked the 43rd consecutive month of price falls, indicating weakness in the export sector. The low level of inflation reflects manufacturing overcapacity meeting weak demand, not good prospect for Aussie and New Zealand dollar. In other words, no signs of change in the disinflation picture in China. The soft inflation print is reflective of China's slowdown and could add to speculation for additional monetary policy easing from People's Bank of China in the month ahead. As we mentioned yesterday, the focus now turns on next Monday's release of retail sales, industrial production, and fixed asset investments. In addition to this data, a key meeting of Chinese Communist Party leaders end of the month will take place, focusing on the next 5-year plan. A lowering of the 7% year-on-year growth projection is a possibility, which could raise the prospects of a Chinese fiscal package. This has the potential to trigger an Aussie and New Zealand dollar short covering rally. But until then, the weak Chinese data may continue to weigh on those high-yielding currencies. The soft inflation figure, coming a day after data showed Chinese imports fell 20% in September, suggested that the economic picture of China is still cloudy. The greenback stayed near a 3.5-week low against the basket of currencies as further signs of weakness in China feigned expectations that the Fed would have to wait longer before any policy tightening. As for today, during the European day, Eurozone's industrial production for August is forecast to have fallen. Even though this is not a major market mover, the figure will raise concerns that the bloc's recovery is losing momentum and could weaken euro a bit. The highlight of the day will be the UK employment report for August. The forecast is for the unemployment rate to have remained unchanged at 5.5%, while average weekly earnings are expected to have accelerated to 3% from 2.9%. Further improvement in the UK job market is likely to support the pound, which could erase some of its Tuesday's losses following the disappointing CPI data. In the US, both the headline and core, excluding autos and gasoline, retail sales for September are expected to have risen at the same pace as in August. The US PPI for September is also coming out. The headline rate is forecast to have remained unchanged, while the core PPI, excluding food and energy, is expected to have accelerated. This data increase the likelihood of a positive surprise in the CPI data coming out on Thursday. The headline CPI rate is currently at 0.2%, and a possible positive PPI could keep CPI above zero. Fed also releases the beige book before its October 27-28 policy meeting. As for the speakers, Norges Bank Governor Olsen speaks. For more information, including technical analysis, please read the full text comment on ironfx.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevou, fundamental analyst at IronFX Global, wishing you solid trading.